Every month, millions of drivers pay their auto insurance premiums. It is an expected, required expense. Money leaves your bank account, goes to your insurance provider, and usually you never see it again. But in 2026, State Farm is reversing that flow. They are preparing to send a $5 billion one-time cash dividend directly back to their qualifying customers. This map shows the scale. More than 49 million vehicles qualify for a piece of this payout across the United States. And on average, that breaks down to about $100 per insured vehicle. Insurance companies operate by collecting capital to mitigate risk. A voluntary $5 billion return to customers goes against what most people assume about how the industry handles its cash. To figure out if a check is heading to your mailbox, we have to look past the top-line number and trace this money back to exactly how it was made. The corporate insurance landscape in 2025 was complex, marked by fluctuating auto repair costs and economic pressures. At the core of that landscape is underwriting performance. In simple terms, this measures how accurately a company predicts risk and prices its policies over a given year. This equation shows the math. An insurance provider collects total customer premiums. From that pool, they subtract claims paid out for accidents, along with their own operational expenses. What remains pools to the bottom as the final financial result. State Farm reported stronger than expected underwriting performance in 2025. That final bucket filled up faster than anticipated and spilled over, resulting in a multi-billion-dollar surplus. Having extra cash on the balance sheet is great for any business, but a strong financial year does not automatically obligate a company to hand billions of dollars back to everyday drivers. If a standard, publicly traded corporation generates a massive surplus, that money flows outward. It goes directly to Wall Street shareholders in the form of a stock dividend, rewarding people who own shares of the company, regardless of whether they actually buy the product. State Farm is different. It is structured as a mutual company. There are no outside shareholders. The policyholders themselves act as the members. So when the company decides to distribute a surplus, the money routes directly back into the pockets of the customers. To qualify for a piece of this payout, you generally must have had an active State Farm Mutual personal auto policy at some point during 2025, and your calculated dividend amount needs to be more than $10. Remember that $100 figure is an average. Your actual payment will vary based on your specific state's regulations and the total premiums you paid over the year. Because this involves large cash payouts, scammers will try to take advantage. Do not click on random links or give your bank details to unexpected callers. Eligible customers will receive official instructions, either by email or a physical check, directly through verified State Farm channels. This $5 billion check is a mechanical payout, strictly guaranteed by the DNA of mutual insurance architecture, returning value to its members. Receiving a one-time cash check in the mail provides immediate financial relief, but a single dividend is a completely separate event from a permanent reduction in your monthly insurance premium. Alongside the $5 billion dividend, State Farm has also announced auto rate reductions across many states, which the company says represent approximately $4.6 billion in annual premium savings. Yet future rates remain tied to volatile external factors. The rising costs of auto repair, the scarcity of replacement parts, and collision frequencies all dictate how much insurance costs. One strong underwriting year cannot freeze those macroeconomic forces across the board, which sets up an interesting financial choice. If you had the option right now, would you take $100 in cash today to spend on gas or groceries? Or would you prefer a smaller, compounding drop in your insurance bill every single month forever? When an insurance provider returns billions to its members after business improves, it shows exactly how much capital flows through the American driving economy. Let me know your choice in the comments, the one-time check or the permanent rate drop. If you want more easy-to-understand breakdowns of the biggest business and money stories happening across America, subscribe to the channel, because the next billion-dollar story might affect your wallet too.